Welcome back, everyone. Please take your seat as we are ready to start the last panel discussion. Let me introduce the 5 panelists on the stage. Mr. Ikeda Shuhei, Operating Officer and General Manager, Project Finance Department, Mizuho Bank Limited. Mr. Andrew R. Elliott, President, ExxonMobil LNG Asia Pacific. Mr. Kinoshita Naoshige, Deputy Head and Lead Program Coordinator, Asia External Representation Office, African Development Bank. Mr. Dularay Venter, CEO, Mid-Ocean Energy. And last but not the least, I'm honored to introduce Mr. Yoshioka Takashi, Structured and Trade Finance Insurance Department, Senior General Manager, NEXI. And our moderator is Mr. Yuri Humber, President of Yuri Group and founder of Japan NRG. Please refer to the handout or go to our website to know more about each panelist and the moderator. Okay, Mr. Humber, the floor is yours.
Thank you very much for the kind introduction, and welcome back, everybody, for a last and final session. In some societies, it's not polite to talk about money at the beginning, so I believe that's why the financing panel has been left to last. Hopefully, we will provide some of the insights that a lot of the project buyers and sellers are interested in. But before I do that, I think I'd like to just say a couple of words about why we're talking about financing in a very mature industry that's over half a century old. I think since this is co-hosted by the IEA, a lot of you will remember that about a decade ago, the agency announced the golden age of gas. But 10 years later, there were a lot of movement towards phasing out, and still we have a movement towards the phasing out of fossil fuels. That has sparked a debate not only about the environmental challenges, but also about the business challenges. Of course, from the banking and the investment point of view, as you saw in a earlier slide from this morning, there are great divergences in outlook for the gas sector, maybe the biggest divergences of any of the major energy commodities. So with that background, I'd like to ask everybody from the producer to the investor to the financing side, how they deal with those kind of challenges. How they look at what the expectations for the low-carbon roadmap for LNG will be, and how they would like to see maybe the future role of the private and the public financing engage going forward. Starting first, we have Mr. Ikeda, who's the General Manager of Project Finance Department at Mizuho Bank, one of Japan's largest banks. So, Mr. Ikeda, if you could share some thoughts about the current environment.
Thank you very much, Yuri. Good morning, everyone. I'm Ikeda from Mizuho Bank, in charge of Project Finance Department. Maybe I don't need to explain too much about who is Mizuho Bank anyway. So let me jump into the first topic, the challenge of the financing and how the low-carbon LNG roadmap helps the industry itself. From our viewpoint, we are now facing 2 major challenges. One from the industry yourselves, one from the banks ourselves. Because the LNG project needs a gigantic amount of the size of the financing, usually the financing to be made on a long-term project finance basis. Because of that, the revenue structure is long-term take-or-pay basis. But now the energy buyers, I believe, faces increasing difficulties how to view the future, since no one knows at this moment how long the energy to be used for the power generation purpose or other purposes in when, sort of. That is the issues from the financing standpoint. And also the banks, as you are well aware, all the banks already, let's say, committed for the net zero society toward 2050, let's say. But I would say supporting energy business until, let's say, toward 2050, from the bank standpoint, it means increase the financing emission during that time. In order to meet those two requirements, I would say, ideal society universe in 2050 and fact and truth we are facing in 2024. Likewise, security of the energy and avoiding the energy crisis. Being a responsible party, we need to make those two in aligned. From that sense, the low carbon LNG roadmap helps to gain the further, wider stakeholders' understanding to the industry. That is maybe first point which I would like to state. The second point for the non-traditional funding source, very spontaneous quick one is a project bond, US private placement or 144A. Those are widely used already in the US market to access to the another liquidity and the funding source, which is good for the market, not necessarily in the US market, but globally, I believe. Functions of the ECA MDBs may relate with that second topic, but maybe I touched upon the next time. Then the last one, the function of the ECA MDBs. Traditionally, those are the institutions worked heavily on to the mitigation of the political and commercial risks and putting additional liquidity to the market, which commercial banks are very happy to work together. Besides, what I anticipate in the future is an announcement effect. I understand the institutions are financing to the LNG transactions when the project is aligned with the G7 ELMAO declaration, which is based on the government-to-government the agreement, which makes the commercial banks happy and be comfortable with the financing to the transaction, working together with the government and the ECAs. That's something maybe I can talk about in the beginning.
Thank you. I've got maybe one follow-up question. You mentioned about having certain declarations that make banks more comfortable. As you know, I think about 5 banks, some in Europe, some in Australia, have essentially said that they'd no longer continue to fund projects in hydrocarbons. So what kind of, do you need more guarantees, let's say, from the government, the Japanese government as a Japanese bank, or more sort of things from an international institutions? Which ones is, let's say, has more weight or more importance?
Thanks, Yuli. I in person may choose the second one, the sort of international agreements. No one can fully ride on to the certain buffer mechanics which avoid the energy crisis. So to make something in the fair manner, to make the society in the realistic, supporting the mechanics by the international members are very needed, I think.
Thank you very much. Okay, so we'll move on from one of the big lenders to one of the big borrowers and the big players in the oil and gas field. I think, we're talking a little bit about some of these pressures that banks are facing. Of course, Exxon has also faced a lot of pressures from shareholders, from activists, and so on. But has it really affected your financing strategies or ability? And how else are you dealing with the current challenges in the financing environment?
Yeah, thanks. And obviously, it's something that's top of mind for all of us, not just here at ExxonMobil. But firstly, let me start off by saying thank you for the opportunity to be here, to METI and to the IEA. I must say, as the only producer on the panel, I certainly do feel a little outnumbered. but hopefully we can cover the balance side of the discussion. So I think we heard this morning very clearly that LNG is a critical part of energy security, and also for the decarbonisation of many countries, including here in Japan. The challenge is the capital-intensive nature of it, all the way from the upstream, obviously, the production, transportation, liquefaction, etc. It requires interaction, collaborations with the finance sector. And I think what we've seen over the last couple of years is some divergence in views or the role of the LNG in the energy transition. And I think is that you can really break that down into two levels. The first one being more LNG provides the opportunity to displace coal, and obviously we all see the benefits of that. I don't need to sit here and describe that in great detail, but I think the second part is what we as industry can do to reduce the emissions associated with the production of the existing LNG that's coming to market today, but also for new sources of supply. And I think we heard a lot of good discussion on the last panel around what industry is doing to decarbonise the value chain, and clearly we need to do more in this space. But I think the critical one as it comes back to financing is the new sources of supply. And typically for project sponsors like ExxonMobil, we will fund internally, but we work with a lot of companies who may not necessarily have that capability. And so there's the reliance on access to capital markets, to export credit agencies, is critically important for the countries in which we work in order to bring on their new sources of LNG, because without access to financing, those new sources of supply are either going to be more expensive or won't be developed. And obviously, if it's not being developed, then we go back to what we saw during the 2020-21 timeframe when LNG was extremely expensive. The energy industry reverted back to coal. And clearly that's not a good solution for any of us. So I think we need to work collaboratively to find a way to not just say no to LNG funding, but how do we make sure that we can work together to find a solution that enables the development of new sources of supply in as sustainable way as possible.
And if I could sort of follow up on that. So Andrew, I mean, obviously you mentioned the changing the changing environment, but I guess one of the traditional ways of financing new projects has been through sort of equity investments, minority equity investments, long-term offtake contracts. And the discussions earlier today talked about, how there is a preference on the buyer side to go shorter contracts as a sort of a long-term trend. That surely affects, their interest in the kind of things the kind of investments that we've seen to date. So how is Exxon adapting to that? Are you looking at different alternative financing models? What are some of the options you are looking at for future financing?
Yeah, so you hit on the key point that most of the financing in traditional projects is typically 20-odd years. And so as we work with buyers on their needs, a lot of that is evolving, particularly around the energy, the uncertainty around the energy transition. And so the two ways to really respond to that is obviously one of the things we've been doing is building up a portfolio of supply points, both geographic, but also different specifications, etc. And by having that portfolio, it enables us to work with the buyers, to work on solutions that are maybe 10, 15 years versus the traditional 20 years. And I think the other way to manage that with with our joint venturers is to look at the alternative financing, like you say. One of the challenges, though, is, or can be, that comes with a higher cost. And then ultimately, higher cost LNG, the end consumer pays. So clearly that's not a good solution if we think about the three pillars of security, affordability, and sustainability. So we have to find that middle ground in there somewhere about looking for sources of finance, be it alternative or mainstream, and still keeping those costs down overall.
And would you say that the sources of finances are diverging in terms of regions? I mean, U.S. project financing versus, a lot of developing economy jurisdictions. Is there some, for example, a greater role we need from the international institutions in some of the developing jurisdictions and so forth?
I think that's better suited to some of my colleagues here. But there are, as we've seen, there's a lot of pressure in the developing economies on the financial institutions. There are other sources of financing in the less developed areas that is clearly going to play a role going forward. And so that, I'll call it competition, is obviously good for the industry.
All right, I thought that would be a nice segue onto our next speaker. So, actually, hold on, sorry, we'll go to Delaray from MidOcean first. Since we started talking about alternative financing, now you have a background in Shell, so the more the traditional supplier side, but now working at a fund that is looking at different ways of investing. So maybe share a little bit of the details on that and how, we've heard that potentially these are more costly, but how these are providing solutions that are not available right now.
Thank you, Yuri, and good afternoon, ladies and gentlemen. It's a real pleasure to be with you today. I attended the very first LNG PCC in Tokyo in 2012, and so I have a very real sense of where this event comes from and an appreciation for the role it has shaped over the years in transforming the Japanese LNG ecosystem, but also its impact more broadly in the world. Now, back in 2012, I represented Shell as global head of LNG, and today I represent a very different company, MidOcean Energy, which is almost the opposite end of Big Brother Shell. MidOcean is a new company. We formed the company 2 years ago, and we launched the company on the basis of a deeply held set of beliefs. 3 beliefs. The first is that LNG is absolutely essential for the energy transition long term. And therefore, that gas and LNG will be needed to a far greater extent and for far longer than what is often assumed, and that versus what policymakers plan for, and also versus what some scenarios unhelpfully make people believe. And thirdly, that all of this uncertainty around policy and future demand and the pressure that some banks are under to stop funding LNG projects, that this will lead to sustained underinvestment in new LNG supply, and that then creates space in the market for a new entrant, a new global LNG supplier. Now, that belief set led to the creation of MidOcean Energy. MidOcean is not a fund, it is a full value chain LNG company, from upstream gas production all the way through to delivery in the marketplace. And even though a private equity firm, EIG, catalyzed MidOcean Energy, MidOcean, as I said, is not a fund, it's an LNG industry company, it is permanent capital. We are a private company, and we're backed to a large degree by private money, and of course by well-known shareholders such as Saudi Aramco and Mitsubishi Corporation as well. And through MidOcean Energy, we funnel capital. We funnel capital from private equity, from large family offices, from investment houses, but also a large corporate and a large national oil company. Our mission is simple. Our mission is to build a highly diverse global LNG company. We have a full value chain mandate, and we can therefore buy assets and companies with upstream exposure, with operational risk, with subsurface exposure, and with commodity price exposure. And these are exposures that your typical infrastructure investor or financial investor cannot absorb, isn't mandated to absorb. Now, being a private company with a strong private equity, M&A, and deal-making culture also allows us to do complex transactions, innovative transactions. It allows us, for example, to acquire a whole portfolio of assets, such as we did with, by acquiring the portfolio of assets of Tokyo Gas in Australia recently. And Tokyo Gas retained security of supply of those volumes to Japan as if the assets had stayed with them. If I turn then to the topic of today's panel, and that's how can financing help deliver the growth of a stable LNG market? Greater market stability is that elusive aspiration that we should never give up on. Over my 23 years in the industry, I've come to believe that whenever we look out 10 years in time, we always overestimate the pace at which new production can be brought on stream, and we overestimate it by a lot. And we always underestimate the latent demand for gas and for LNG that is out there, especially over the next 10 to 20 years, when so many gas-consuming countries see a substantial decline in domestic gas production, with all the infrastructure that they have already in place, which enable latent demand to appear and move into the market at ever higher price points. So when it comes to having an LNG market that is both growing and is relatively stable, I do not believe that we have an issue on the demand side. If anything, the pool of latent demand east of Suez especially and in the southern hemisphere is likely still grossly underestimated. Therefore, if a more stable LNG market is what we want, then the critical question for me is what can we do to accelerate supply? Esteemed colleagues on other panels today focused on some of the channels, the many challenges faced by LNG projects with political risk and regulatory risk and uncertainty, legal risk being just some of them that's been very visible in recent times. But lining up financing for LNG projects also adds materially to the challenge and the timeline to get new LNG FID'd. And so making it easier for LNG projects, new projects, to take FID 1 or 2 years sooner can make a real difference to the industry. Allow me 3 thoughts on what could help. The first is to be unambiguously behind LNG. Governments and policymakers have sent very mixed signals in recent years. This has led to often unachievable and unaffordable policy targets to which the financial sector had no choice but to comply with. It would be very helpful if governments around the world were to send a clear and unambiguous message that LNG is part of the solution for the next couple of decades, that we need more LNG in the global energy system. Say it, take a clear stand, even if some in society will criticize you for that. And I would hope that commercial banks will stay in the game for LNG, because it is so essential for the LNG transition, and that commercial banks likely would take a similar clear stance in favor of funding LNG projects. The Low Carbon Roadmap, which is an initiative of this gathering, can be a platform for both policy positions and also the positions held in internal mandates of the financial sector to be adjusted on the back of the Low Carbon Roadmap. The second thought in terms of what we can do is the need to break the catch-22. We must try to make it easier to raise debt at the project level. A new project has an almost impossible number of puzzle pieces to put together, and for smaller developers, the need to have more than 80% of volume sold and backed by investment-grade off-takers in order to finance a project that will increasingly supply into liquid markets is less and less a sensible requirement. Too little credit is given to how big, deep and liquid the market has become, and also to the breadth of the buyer universe that keeps on growing every year. But a large share of these new buyers are not in investment grade or are not rated, and so does not count to the project finance threshold. To me, all of this feels like an unnecessary high bar that chokes the pace at which new LNG supply can be brought on stream. And it is out of touch with how the market has evolved over the past 3 decades. Commercial banks and ECAs especially can lower this bar without taking on undue risk. A second way to break the catch-22 is to do less project finance and more at the sponsor level, at the holdco level. This absolutely works, but it is today really an option that's only available to the large IOCs or to NOCs, unless there are pools of credit cover that smaller companies and project developers can tap into. That is missing today, and it would make such a big difference. Providing credit support is a huge enabler for project developers and for smaller companies like mine to make us run further and faster. Again, ECAs, multilaterals, and development banks are critical players in this regard. My third and last thought is to embrace private capital. I do believe that private capital, both private debt but also equity, will play an increasingly important role in financing the LNG industry, and in fact that it will be needed to avoid underinvestment in LNG. There are vast pools of private capital looking for employment. It's pragmatic capital and often capital with a very long-term horizon. We have already seen the big infrastructure funds appear on the scene to fund LNG plants and pipes and gathering systems. That is absolutely helpful, but these funds do not take any operational and commodity risk, and so you still need debt and equity capital that do take full value chain exposure and full value chain risk. I expect that we will see more private credit in the debt mix going forward, especially if commercial banks start to stand back more. I also expect that we will increasingly see private equity on the equity side, of which my company, MidOcean Energy, is one example. Private equity can play several non-traditional roles in the LNG ecosystem, a little bit like we did with Tokyo Gas when we enabled them to free up a couple of $2 billion from their balance sheet that was locked up in small non-strategic stakes, and they could redeploy that capital to build a strategic upstream gas position in the US, thereby strengthening their company, but also strengthening energy security for Japan in the process. Thank you for your kind attention, ladies and gentlemen. I am an industry man, not a finance expert, so my insights are limited, but thank you for having listened to them nevertheless. Arigato gozaimasu.
Thank you very much, Delary. I think you've outlined a lot of great details, but just one very quick follow-up question. You mentioned the gaps and you talked about them in terms of financial instruments. Are there any gaps in terms of geography? Just certain regions where you see more opportunities than others?
No, I think what you have, LNG is so globalized, and so the players, all of these players, both private and public, cover the globe, span the globe. So I don't think it's a function of geographical cover. It's really a function of elements like access to credit cover, for example, that I really believe is one of the big game changers for the industry if you want to bring more new entities, new players, smaller players, innovative capital, private capital into the mix. If there could be more multilaterals and governments that engage in providing, for example, credit cover umbrellas for new projects and companies that can be very transformational, and that can be applied absolutely everywhere. It's not dissimilar to, if you go back to the first 3 decades of the energy industry, Japan Inc. provided a holistic support package for new LNG projects, from buying it to funding it to building it and developing the ships and some of the key critical equipment pieces. That's the sort of systemic thinking I think that we need to get back to.
Thank you very much. Speaking of that kind of more Japan Inc. broader approach, we're going to have a couple of comments from the public side institutions. So turning to Kinoshita-san, obviously Africa is one of the new frontiers for Japan LNG, and Mozambique being a huge development project. So could you talk us about how the public institutions are approaching the current situation with financing?
Thank you, Yuri, for introductions. And actually, I was preparing for my FTB's introductions and my little bit background, but due to the limited time, I'm going to delete the first place. And I'm going to straight to the point here. So challenges in financing LNG project. I believe the most difficult challenge in financing LNG project is that actually natural gas remains relevant in Africa since nearly half of the 1.3 billion they lack access to the electricity, while renewable energy sources are not always available. So that's a huge issue. Yeah. And so what is AFDB's policy in financing the natural gas and LNG? So I think that's the most important. And we have invested Mozambique LNG project back in 5 or 6 years ago. And we are trying to sort of, push that project now. And after that, the situation has been gradually changing. And we are more cautious financing LNG as it is a fossil fuel. And we view LNG or natural gas as a transitional energy. And we have to meet the net zero target. So that's the first place. And actually, current policy allows us for case by case, but the board approval I think, is becoming more challenging. As a policy, we have the 10-year strategy, and only LNG project align with Paris Accord and national energy strategies, such as NDC or long-term strategy, will be supported. But that's based on the case-by-case basis. A lot of debates, discussion, and persuasion to the board is necessary. If we talk about African Development Bank, 60% of the shareholders are African countries, and 40% is non-Africans, including Japan. Japan is the 4th largest shareholder, following Nigeria, US, and Egypt. That's our composition of our institution. And regarding public financing institution in financing LNG, as everybody discussed about, ECA, it's been tremendous, instrumental for enhancing the creditworthiness of the project and risk mitigation and everything. And without LNG, sponsored backed project, it would be not possible. So I really worry about, the foreseeable future, what the ECA policy would look like. I've been hearing all this discussion from previous, JBIC and etc. That's number one. And regarding the public financial institution, I think the local government involvement is extremely important, because LNG, gas is coming from local market, and some kind of the distribution of the benefit is necessary. So just for one example, that Mozambique project, 15% of the share is ENH, that's an oil company in Mozambique, And that oil company, along with other sponsors, they guarantee for the construction risk for the lenders. And that guarantee, of course, oil company cannot guarantee that kind of amount, and the government of Mozambique back up the guarantee. So the mechanism to establishing that kind of mechanism so that distribution, the benefit can be achieved not only by a tax but also as a dividend. So that's important. And lastly, this is not directly related to financing to LNG project, but we sincerely request a Japanese financial institution and the government to look at the LNG project, not just exporting the LNG to Asia from developing country, but the industrialization of the local country is extremely important. LNG, it's gas, but it can be sort of developed to a petrochemical industry, and also power generation, pipelines, and also to the extent of the fertilizer, which helps to expand the productivity of the agriculture products in Africa. So thank you very much. I stop here. Thank you.
Thank you very much. I think that's great. I just have one quick follow-up question, if you don't mind. You mentioned how it's becoming more difficult to discuss new LNG projects at the board level. Obviously, country governments play a role there. So a question, I guess, everyone knows Japan is METI is working on the next edition of the Japanese basic energy strategy. Is there anything in that strategy that you will particularly look at, or you'll focus on, or hope for? Or will it make any strong difference to your process?
I think it's a very difficult question, of course, as I said, that the LNG can be reviewed as a transitional energy toward net zero. So we really have to look at not just a particular one project, but we have to look at the overall picture. And FDB and also Japanese government are pushing green hydrogen, green ammonia. So the combined cycle, the equipment can be utilized not just LNG, but for green hydrogen. So I think we have to look at sort of the transition, how this LNG project can be migrated to the new stage, utilizing that existing technology. So that kind of things is important. Simultaneously, we have to push every sort of the CO2 reductions and CCSU technology or methane abatement and things like that. So we should do it all comprehensive in a manner. So that's what I think. Thank you.
Thank you very much. And last but definitely not least, Yoshioki-san from NEXI. So Japan's credit agency has played a massive role in the Mozambique LNG project as well as US projects. So could you tell us a little bit about how the situation is at NEXI regarding the financing and...
Yes, thank you very much, and thank you. Really appreciate to be invited here, and there's very valuable opportunity for this conference, and NEXI, as you might well know, that's around the Japanese export credit agency, mainly focusing on promoting the foreign trade and the investment from the Japanese companies. But we are now expanding our facility. I would say there's some non-traditional facility we are currently working on. Our basic facility is covering the export credit and the investment and the loan by providing these kind of some insurance to cover the risks for both political risks, including some war or terrorism, as well as we are covering some credit risk of some case of some default case or some failure of some delivery of the shipment. Yes, one of our main focus has been in energy sectors, and Menexi applied its insurance tools to support several types of the upstream and downstream oil and gas projects ranging from Middle East to Asia Pacific, and now working on America, or Russia, and Africa. Nexi's outstanding commitment in energy sector has been dominating its very significant portion of total Nexi's amount of outstanding. With regard to this question about a non-traditional tool to cope with the energy demand, Nexi already expanded target some transaction. It oversees untied loan insurance facility to include, as we call, revolving credit facility to set and flexible use of the credit lines and additional support for loans even to domestic borrowers from last July, in addition to our traditional client outside of Japan, so as to provide enough liquidity to ensure energy security through cross collaboration with the Ministry of Economy, Trade, and Industry. And Nexi already underwrote 3 energy transactions using these new facilities, which amounted more than $2 billion US dollars. One which was to support LNG trading company in Singapore, and another case was for Japanese utility companies to procure import some LNG from some foreign market. And yes, regard to the future natural gas demand, we share the common understanding on the imminent constraint where growing demand of some gas resources triggered by AI data centers or some emerging economies, as well as slow pacing of shifting to wind or some nuclear power, or some investors' focus from the traditional carbon project to decarbonization going along simultaneously. So we are exploring additional non-traditional facility to fill such financing gaps to secure natural gas development. So in addition to some next domestic loan with a revolving credit facility, as I mentioned, we are trying to apply our renewed untied facility we started in 2020, and we call LEAD initiative, with more flexibility to determine the national interest to justify our public support on energy security-related project, not only focusing on termed offtake contract to Japan or presence of the Japanese company, but to consider more broad context of the national interest of Japan, such as contribution to the global energy supply or enhancement of diplomatic relations with oil and gas producing countries. In this context, I'd like to highlight some 3 elements worth to consider as possible future solutions to secure financing to gas projects currently on the table of discussion, and some of the speakers here mentioned, and also Nexi is working as well. The first, The first one is to support not only for the direct lending, but through diverse sorts like funds or some bonds, even utilizing the blended financing scheme, collecting the contribution from both public and private sectors. There would be a constraint to rely wholly on direct lending, which could be bound by transparent or accountability requirement for the finance emission. We should more utilize this diverse source of funding, including some multinational funds or some bonds to supply finance to energy project. The second solution would be to explore some public support, not only for some upstream with concrete long-term offtake agreement, but with supply commitment in emergency scenario, as well as to support the trading business of oil and gas overseas. There is no need to reiterate the significance of pursuing the long-term contract for the natural gas with public support to ensure the stable future supply But considering the cost of the contract or the weak point of the natural gas to maintain the long-term storage, it will be worth exploring emergency commitment or securing the trading volume, which can be directed to Japan in case of the emergency. In this context, today's successful agreement between JOGMEC and ENI to enhance cooperation on energy security would be expected to accelerate our discussion on financial arrangement for potential project with the emergency supply commitment of the natural gas. The last one, I think that it's very important is you mentioned to prepare and present clear roadmap toward the transition to give assurance for investors on prospective upper limit or use of traditional carbon resources and the effectiveness of the renewable or traditional sources of like hydrogen or ammonium to reach specific goal of carbon neutrality. Yes, we have several optional solutions to secure energy finance. I would like to continue to focus and realize the solution with some additional non-traditional solution to secure the natural supply of the natural gas through close collaboration and dialogue with borrowers or the lenders or some corporation to be engaged in this natural gas trading. So we really appreciate to have this kind of conference to get together to bring some ideas to secure some new, traditional ways of the financial solution. Thank you very much.
Thank you so much. And a very quick question. You mentioned that you're now looking at getting involved in projects where Japanese companies are not present. Is there any specific event or something that led to this thinking? Was it a gradual, decision that came through a multiple set of circumstances?
Yes, the next is traditional support is just requires involvement of the Japanese companies' investment or the the long-term offtake contract of the oil and gas. But we are exploring, although we expect providing the future business opportunity for the Japanese companies. But yes, we see the reality that there will be a lot of new energy project which the currently Japanese company is not involved. So we seek that this kind of justification of our support by seeking for whether this project will contribute for the more global supply of the natural gas, which can be in future contribute to the stable supply to Japan, or the we had support provided support for the trading company overseas for the natural gas. Although there can be no portion to be imported to Japan, but we emphasize the future importance of this project to be supported by our public institutions.
Thank you very much. That's a very interesting development. All right. Well, I'd like to thank very much all of our panelists for sharing some very interesting and very thoughtful ideas about how to take the financing and the industry forward. I know you're all excited for the lunch coming up, so I'll end it there. And please give a big round of applause to all our speakers today.
Thank you, Mr. Humber and the panelists. This concludes our third and last panel discussion.